Hello and welcome back to the channel. Mortgage bonds started the week higher, and that's good news if you're watching rates. Last Friday, mortgage bonds held an important support level and closed right at 101.09. That was a solid finish. They're now rebounding inside a wide trading range, with the next upside target about 17 basis points higher at 101.39. We're still in a range where bigger moves can happen in either direction, so it pays to stay alert. The 10-year Treasury yield also stayed under resistance at 4.71%. Yields are edging slightly lower and have room to move toward 4.588% if the current trend continues. Lower Treasury yields often help mortgage rates ease. Several factors are supporting this calm. Oil prices dropped after news that a major military action was called off and talk of potential negotiations with Iran, plus possible progress on keeping the Strait of Hormuz open. Lower energy costs can ease inflation pressure, which is helpful for the overall rate picture. There's also been coordinated action to support the Japanese yen. The U.S. stepped in partly to limit the need for Japan to sell large amounts of U.S. treasuries. That helps keep our yields from climbing higher at a time when they're already elevated. The intervention itself is contributing to yields moving lower this morning. This is a big jobs week, and the numbers will matter. Recent data has been softer. The last official jobs report showed only 57,000 jobs, and weekly private data suggests the brief rebound in hiring may be fading. Markets are looking for around 70,000 private sector jobs and about 83,000 in the official report, with the unemployment rate expected to rise slightly from 4.2% to 4.3%. If the numbers come in weaker than expected, it could give bonds more room to rebound and reduce pressure for any rate hike. That environment usually helps mortgage rates stay steady or drift lower. For homebuyers and homeowners thinking about refinancing, the message is straightforward. Mortgage bonds are holding their ground, yields are not pushing higher right now, and softer jobs data this week could keep the trend friendly. Rates can still move quickly, so it's smart to stay in touch with your lender and lock when the numbers work for your situation. That's the current snapshot. Bonds rebounding, yields edging lower, and a key jobs week ahead that could shape the next move in mortgage rates.